welcome to another video by the Trader Guy at thetraderguy.com. In front of you is the Euro US dollar weekly chart. As you can see, I have lines drawn every 500 pips with a thick line at 130, and I also have a descending triangle formed here, and this is a little bit more obvious on the daily charts when I switch to them. But that is the setup that I have shown on this chart now. The weekly candle is a shooting star, but it's at the bottom of a down move. And a lot of people do not recognize that this is actually a very bearish signal. In some ways, it's probably more bearish than a shooting star at the top of a run higher. And the reason being is, as opposed to, say, this shooting star, which did land you quite nice move. It's about 1,000 pips, really. But you can see that it is fighting the recent upswing. When you get one that's down like this, that is in tune with the at least immediate trend, that suggests that the trend has pushed prices down. The bulls have tried some type of last stand rally and it's failed. So this is more of a continuative sign, and I love these candles. Any of you familiar with Niall Fuller? He calls them fakies. I call them continuation shooting stars, or for those of you who use bar charts and are familiar with the pin bar, Pinocchio bar terminology that was made popular by Martin Pring. I also call them contend pens sometimes, just short and continuation pin bar. But nonetheless, it all says the same thing, and it says that we have fallen, we've broken through some resistance or support in this case, and when price got down there, the bulls tried to rally, and now we've dropped back down. They're already losing money. Now the question is can we continue? I would suggest yes. I think we probably will. The move really was predicated upon the elections as we gapped over the weekend, which numerous countries voted against austerity measures, and then the Germans, of course, voted against the bailout, the other side of the coin. Either way, it does look like the austerity measures are in serious trouble in Europe, and it's not surprising to me personally. The euro itself is a flawed concept. So I think the markets are finally starting to express this, and I think we may see a little bit of a move down. There's a lot of talk about central bank intervention at 130. Has been the case with Asian central banks trying to protect their diversifications. I buy the story, but the fact is that 130 has given way, and this is significant. You can see a little bit of an area down to 129. So my suspicion is if we can break lower at 129, we're going to fall quite a bit. The 126 level would be the first spot that I would recognize as potential support, and then 125 because of two things. Because of the fact that it's 125, it's a large 500 pip number, but this descending triangle is roughly 500 pips. We broke down at 130. You subtract 500 from 130, you get 125. So there's a couple different reasons to think that we'll hit at least 126 and possibly 125 based upon this. The daily chart has a shooting star Thursday and Friday, so that just adds more credence to this, and we'll just have to see how things play out. If we do manage to rise back above the 130 level, though, I'm going to still stay short of this pair or not in it at all. I will probably be out of the trade at that point, but I'd still be looking to sell because even though it would be a bullish sign, we need to clear the top of this descending triangle for me to even remotely consider going long the euro. And there are far too many problems with the euro right now to consider owning it. Granted, the dollar has its own issues, and this may not be the best euro play, but this is the most common one, so that's the one I'm looking at. I personally don't see any reason to own the euro against pretty much any currency that I can think of off the top of my head right now. The other pair that's caught my attention is the Aussie dollar, and that's because of a couple different things. Number one, looking at this weekly chart, we had an absolutely brutal down week. not this past week, but the week before. We had a bounce and we tried to find this 102 support and resistance level. We did, it failed, and we've continued to fall. We're sitting basically right at parity, which of course will cause some type of reaction. But you can see in the past, the parity's been sliced through several times. So it's going to be a minor support level at best. There are concerns about a slowdown in China, and I think that's one of the big drivers right now. When you go to the daily, I had pointed this out a while back that I had the idea of possibly a bearish flag, but I also recognized the fact that 102 was just below, so I wanted to see what it did. I am short the Australian dollar, and you can see that the gap over the weekend wasn't much. It fell, and then most importantly, 102 held, and that was the first tell. The Thursday candle is a shooting star at the bottom of a massive move down, just like the euro, as you can see, and the Friday candle closed at the absolute lows, which of course the S&P 500 closed the lows as well. The two will often mirror each other. So looking at this, it does look like we could have potential to fall to the downside. As a side note, the uh, flag that I had drawn out on the daily measures to about 96, which would be the bottom of this range, really. So it's not very unbelievable. I mean, you can see there. Now, if 96 gives way, I think we fall much farther. But I'm not necessarily looking for 96 to give way. I'm just looking to get there. And for this week coming up, these are two of the more vulnerable currency pairs that I see out there. I do see potential dollar strength just about everywhere. Um, the pound looks weak, although it's stronger than these two currencies against the dollar, so I can't be bothered with that. There's several support levels. The dollar looks strong against the Canadian dollar, except for we're right in the middle of a massive resistance zone, so I can't go long that one either. Kiwi dollar looks sick, and as you pull up the dollar yen, um, ironically enough, it looks very bullish, which normally the dollar falls with risk aversion against the yen, but it does look very bullish with a hammer and a 50% retrace. So a lot of things going on for this week. It should be interesting, and I think the negativity continues.